Hi YouTube, this video is about technical and fundamental analysis. So first I was much into FA, but like now I realize technical analysis works better for me, and I can tell you the reason why. The big downside of FA is that you can't time the sentiment of the market, because FA is based like on you buy a company with a competitive advantage and you try to pay under the fair value, the intrinsic value. That's like the basis of investing. But the problem is that markets are never at equilibrium. They are always over or undervalued. So like sometimes assets can stay just for undervalued for long times. There's like the saying, markets can stay irrational longer than you can stay solvent, and I think that's true. And also you can time the sentiment with FA, but with TA you can, because people react on the same type of way to events. I use mostly Elliott wave and Fibonacci, and really I find it works great. The trades we do have 70% success rate. With TA I could never achieve that high accuracy. But like I think FA works, TA works great on the short time, because markets are very sentimental on the short time, but on the long time fundamentals will eventually come above. Like when something extremely overvalued, for example Snapchat, it has to come down, but like not in a straight line. Financial markets go through different type of cycles, and with Elliott wave it's the type of cycles the markets go through that you try to understand and time. And like that's what I find the downside of FA, that it doesn't acknowledge that the markets are sentimental, because you have like the efficient market hypothesis. I don't know if you guys know that. In the 80s it was very popular among institutionals and more like professors. They had this theory that the market is always priced correct, and therefore you can't outperform the market. But I have some good arguments against it, because I don't think it's true at all. If it would be true, it would be impossible to outperform the market, but a big number of people have been outperforming the markets, and there are such things like boom and bust cycles. So, and also every market participant handles with a basic knowledge. There's no such thing as perfect knowledge. We all have unlimited resources, unlimited knowledge, and so we handle based on the information that we have. But like how can an asset ever be priced perfectly if the market participants are not 100% rational all the time? And even then, like at the end, prices of assets will always be speculative. There's a certain degree of speculation. It's not 100% based on speculation, but financial markets are not 100% rational, and that's like kind of downside of FA, fundamental analysis. That's about what I wanted to say in this video. If you need good trading signals for cryptocurrencies, check out Lunar Express. We'll put the link in the description. Thanks for watching. Bye.